it's my year, yeah.
Good morning, everybody. Welcome to the morning show here on Stock Market TV. It's the best morning show in finance. I am Spencer Israel. We've got JC Parets and Steve Strazza in the house today, plus Chartmaster Alfonso lurking backstage, making charts as we speak. What's on our minds today? Let's see. We are talking about oil. How could we not, honestly, after the last couple of days? Maybe a year-end rally in stocks? Question mark, potentially. We'll talk about that. We got some news to discuss, some individual news. We actually have a trickling of earnings here coming in this morning, and there will be more later on in the week. Guest today is Mike Lee, founder of Mike Lee Strategy. He'll be on in about 20 or so minutes. We'll have Kimmy Sokoloff after that. Patrick Donawilla after that. So you know the drill. Hit that like button. Hit that thumbs up for me. Good morning, Trickwood, Robert, Curtis, Mary, Aubrey. Good to see you guys. Let's go.
What's up, fellas? You missed me? No back?
So, tell us about your weekend, buddy.
Just quick in and out of Miami. It was great. It was lovely. I mean, let me tell you, the tailgates in Miami are, some things never change, bro. Some things never change. I went down there with like 25 New Yorkers, and like there were more DJs than people like in the parking lot. There was so many, it was out of control. Like there's like, you know, the smoke, like the party smoke. What's that? It's crazy.
Yeah, I wish I could have been
fog,
there.
Yeah.
Never tailgated in Miami. Is it like a Cuban thing? You guys, most people are like doing Cuban tailgates, or
Not really, just us. It's mostly like just animals just partying, like of all different colors and shapes and sizes.
well,
It's not like a racial or cultural thing. It's just a Miami thing. Like like I said, like all different colors, shapes, and sizes, all partying together. It really is such a beautiful thing to watch, you know. As much as like, you know, the media likes to say, oh, the red and the blue and the this and the that, like just everybody getting together, you know, it's pretty cool.
So you've obviously tailgated at the Meadowlands over the years, I would assume. How would that compare?
Boring. It's
Really?
The Meadowlands tailgates are like a library, dude.
Okay.
Yeah.
Wow.
The tailgates in the Meadow, like seriously, like honestly, I had forgotten just how wild, because I've been busy having kids and whatnot. So I haven't really been tailgating in Miami much lately, but it's kind of like, you know, we were right back. Even my buddies were like, yo, this is crazy. I'm like, yeah, this is pretty wild.
That's cool.
Yeah.
You know, some of these colleges, some of these big state schools, Spencer knows, they know how to tailgate, especially down south. Too.
Well, the South, yeah, people in the Northeast, they don't know how to tailgate. In the South or the Midwest, like you're gonna get people on the West
South
Coast.
and Midwest.
I went to an Oregon Midwest. They know how to tailgate in the South. And I was on the West Coast. I was at an Oregon Stanford game at Stanford. I kid you not, there was a girl at the tailgate reading a book. Kid you not, she was just in the corner reading a book in the middle of the tailgate. Couldn't believe it. They don't know what they're doing out there.
Maybe the craziest thing that you did, though, very impressive. I was like, what? You were there for 24 hours.
I was there for like 20 or 22, something like that.
In and out.
It's like Vegas. Got to get in and got to get out.
I've been to Plattsburgh. They don't like my kind very much there. They don't. Dude, are you kidding me? These Cubans come into Blacksburg, Virginia. They don't like me. And they don't like the things I have to say.
This is not state of the tailgates. This state of the market. Should we do that?
That's right. Hit it, baby.
That's what it was. That could be a podcast.
All right, guys, listen, you know, what was really funny, can we just talk about how strong bonds did yesterday with the bond market closed?
Well, they bond futures. Bond futures.
And ETFs
performed well. Yeah.
And ETFs. So
but not the bonds themselves.
I think bonds had the best day in 20 years or something like that because they closed the bond market.
So I had to go to town hall for something yesterday. I get there, doors locked, and I go, duh, bond market's closed. I should have known.
one of those weird things, like, you know,
Government.
It's Canadian Thanksgiving. It's Indigenous People Day. It's Columbus Day. It's all these things, but then the stock market's closed. Some markets open, bond market's closed. It's like very confusing.
All right, so they're opening up lower though here today, correct?
Bond futures are opening up lower, giving back a quarter, a third of what they did yesterday, something like that, right?
All right, so maybe they get up off the ground here, build out some sort of tradable low.
Yeah, I think so. Listen, just the bond market just not crashing every day probably has to be a decent catalyst for the stock market, right? Just chill out. Like, it doesn't even need to go up. Like, just stop crashing. And I think that's enough, right?
Yeah, from an intermarket, what does this mean for stock standpoint, which is usually what we're after? Bonds collapsing nonstop for the past few weeks is probably about as bad as it could be.
Yeah, because let's remind people why. This is a real asset class. This isn't like crypto or like pot stocks. Like, none of those things matter. The bond market is $120 trillion. So if the bond market is either crashing or ripping, either way, just moving very fast in one direction, like, people can't think straight. It's like in Southern California when it rains, like, nobody knows how to drive. Like, that's what happens when the bond market's going crazy. Like, people freak out and all the algorithms and correlations start going out of whack. Things have to get unwound at the same time, which causes more unwind. Volatility in the bond market just spills into commodities and Forex and certainly the stock market. So stability there, I don't necessarily think is a bad thing. And not to mention, you know, sentiment, you know, you're starting to see, you know, we've been talking over the last couple of weeks how sentiment's kind of somewhere in the middle. And you can argue that it probably still is towards the middle versus extremes, but we are seeing some extreme positioning. Look at the CTA data, man. Most short they've ever been. Look at the last couple of times that they were this short. The end of 2018, I remember it very, very well. We were actually long bonds in the fourth quarter of 2018. That was a great trade for us. And then 2019, absolute ripper as that unwound. And then, of course, early 2016. I remember in 2015, I was total perma bear. I thought Deutsche Bank and Credit Suisse were going under. Eventually, Credit Suisse did go under like 7-8 years later or whatever. I was really a perma bear in 2015. And I changed my mind early on in 2016 when the data changed. And here's just a great example, early 2016. Huge extremes in short position from the CTAs. And we're back there now. So from a seasonality standpoint, if you want to throw up the next chart, from a seasonality standpoint, this would be a perfectly logical time for stocks to get going and have their typical year-end rally. And maybe we don't get that year-end rally. Maybe that doesn't happen. But the market has been perfectly normal. It's the way it's been behaving over the last few months is the way it should behave over the last few months. Just perfectly normal after having a great first half to the year. Again, it was supposed to have a great first half to the year. So just very, very normal. So if we're going to continue with these seasonals, a rally into year end and into January should be perfectly normal. And just to remind everybody how we treat seasonality, we don't necessarily position ourselves ahead of seasonal strength or cash out ahead of seasonal weakness. It's really just guidelines. And when the market ignores seasonal trends, that's the signal. So the fact that the market's been messy for the last few months during a time when it's supposed to be messy is really not a big deal. Like, turn the page, move right along. Nothing to see here. This is perfectly normal. So if we had seen tremendous strength over the last 3 months in stocks, that would have been really interesting because that's not what was supposed to happen. We saw that actually in 2016 before the Trump election, and then stocks ended up ripping regardless of who won the election. But we were already seeing seasonal strength pre-election in 16 when stocks were supposed to be weak. That has not happened here. It's been weak like they're supposed to. So if we are here in January and we haven't gotten any rally at all, there's probably a bigger underlying problem underneath the market. But no evidence of that at all. Extreme pessimism, healthy sector rotation, leadership, more importantly, right? Bull markets need leadership groups, and we're seeing them. Are we not, Mr. Strazza?
Yeah. For me, it's more so the price action from last week, right? Kind of, you're talking about seasonality and sentiment. Price action is really falling into line with those bullish catalysts, potentially bullish catalysts, right?
That's right.
You want to talk about these failed tops at all?
We can talk about the failed tops. You could do your victory lap on how much money you've been making in tech.
No, No, it's not about. Listen, the trade's not at all over, right? We were looking for a failed move and then a fast move, so got into some short dated calls. Throw up chart 3. We'll just talk about it. And we got Friday was huge. Did you see these engulfing candles Friday? I know I've been talking to you about them every time I get you on the phone this weekend.
Oh yeah. How could you not see them? For me, one of my favorite things to do, market analysis wise, is a Saturday morning, chart check.
Mhm.
Right. You can usually catch me running my mouth on Saturday mornings, on Twitter and whatnot, getting people all amped up, just
Yeah.
telling it like it is. I'm not a storyteller. I'm just showing you price action, Don't
So
don't don't hate me for it.
So while these charts are looking this way on Friday, not quite this good yet, right? Coming into Friday, we're at these key levels. Throw up this cybersecurity one. This is just an example. 25, I guess. I don't know if we have the hack one. Hack actually engulfed 3 full weeks, right? And I'm talking about the real candlestick bodies, right? Not the spindles. 3 full weeks of trading activity in one day. I mean, that really stands out. For me, every year, maybe 2 years, I see candlestick formations where I'm just like, holy cow. Like, this doesn't happen very often. This is that. Like, these bullish engulfings really, really stood out to me Friday. Yesterday, I love how we came in with negative headlines that were pushing futures lower, came in pretty much right across the board. These things fought back. Even the ones that maybe didn't close positive, like semiconductors, they were rallying, pushing higher all day throughout the session. For me, you got follow through yesterday in these candles protecting growth on Friday. So I
Yep,
think,
that's
like
right.
you said, that trade continues through the end of the week and next week.
How many times have we seen these rallies sort of kick off with either these key reversals, right? There's different types of reversals, and I would categorize these engulfings and follow through for that matter, similar to some of these hammers and reversal candles that we've seen in the past. These are the types of things you see at turning points, both tops and bottoms, by the way. You flip this chart upside down, you'd be making the exact same argument right now to the downside, right? That's just how markets behave.
Totally. And there was a comment like, "Oh, it's not really a bullish engulfing. It's not coming off a downtrend." Yeah, it is. Yeah, it is. The market's been selling since July, right?
That's right. We're 3 months in. The anniversary of that top is what day? It's Thursday.
Saturday AM chart check. JC is the best JC. I don't know what that means, Riley. Is that even English? But I think he's giving you a compliment.
Yes. Yes. Well, you know how I always talk about these monthly candlesticks and how important they are, and it really gives us an opportunity to zoom out and take a step back.
Sure.
The weekly charts do the same thing, maybe to a lesser degree, maybe on a slightly shorter time frame. It happens 4 times a month instead of once a month, but it's the same idea. It's the same principle. It's like, all right, what happened this week? As opposed to what happened yesterday or what happened today. What happened this week, and where does that fall within the context of bigger trends? As important as it is to do these things on a monthly basis, on a weekly basis, they are very, very, very helpful. And, Monday morning, cup of coffee, screaming kids, few charts. It's lovely. It's lovely around here, The kids are interested in the computer. They just want to like touch all the buttons, one of the kids on my lab and we look at charts. They love it.
Are they fighting over iPads yet?
We're keeping the iPads away from the kids.
Smart.
Yeah. They're very addicting, those things. So they don't need it. They got enough stimulus. They listen to Miss Rachel and a little Blippy. They got enough of that. Can we talk about the leadership? Hello. Technology continuing to act well, man. Throw up slide 9. Can you throw up slide 9, the one right before this one?
Look at these communication stocks.
Hold on. Before you get into communications, is this what this is? Is this a falling wedge? A bullish falling? Look at us with our chart patterns today. Chart pattern talk alert here.
You can call it a number of different things, right? I think the cup and handle police will be after you if you call this anything other than that, if it takes much longer here, right? But what it really is we ran up, we tested the old highs, the upper bounds, key resistance zone, and we consolidated. In fact, we consolidated and digested those gains from earlier in the year in a pretty damn constructive fashion.
To say the least.
Look at this. That's tight.
Well, here's my question.
Yeah.
Is that what this is? And it's just a high and tight flag digesting that overhead supply and we're off to the races, or is there more coming? Is there more to this correction?
listen, I would go back to the failed tops that we just showed, right?
Yeah,
if those
true.
things are back above those pivot lows and those were not tops, I think we're talking about S&P back to 4,600 soon.
Put it back up, Spencer. Show them. Show the kids.
So like the price targets on these really like, yeah, we can talk about right shoulders, but they're going back to those old highs, right? So like we're talking about Qs back to 388, 390-ish. That would represent, I'm looking at the ETF, that would represent about 6%, right? So it's not tough to get there. And then the S&P has a little bit more work to do, but to get back to those late July highs, it's, 460, so that'd be 4,600, a little over 6%. So we're not talking about a crazy run here. The follow-through of these failed patterns should really get you there.
Seriously. From failed moves come fast moves in the opposite direction. And boy, this is set up. So what are you looking at? Realistically, probably what, 4,350?
And what, S&Ps?
Yeah.
Oh, right. As that little neckline?
Yep.
Yeah, 4350. Yep.
Yeah, that's probably a good level. If we're above that, the squeeze is on. Right. And then what are we making about oil here? Can we throw up that slide 12?
I'm thinking about oil. Everybody wanted to talk about it yesterday and had some hot take about what these geopolitical developments of the weekend mean for oil. If you look at the price action from oil yesterday, it was having like its best day since April. It hard retest right back to those old pivot highs, found support there, ripped off them. You could just say that was a technical move.
Yeah. I don't know what these geopolitical events have anything to do with crude oil. We could talk about how maybe they do, maybe they don't. It doesn't really matter. At the end of the day, it's more about oil. And the fact that crude oil and the dollar have been moving together lately, throw up slide 11 here. If this dollar rolls over, as odd as it is to say, is a weaker dollar going to mean weaker oil too? Is that,
stop it. I would say the opposite, right? I would say, listen, if crude can rally as the dollar's moving higher, geez, if the dollar gives back and corrects here, crude should rip.
If this dollar index starts losing 105, 105 and a half, 105 and a half to start, if it's below 105, it's over. 105 and a half probably. That's probably the better number. 105 and a half. If we're below that, this dollar's getting smoked. Stocks are ripping, man.
But the way it looks now, JC, this is a nice base, right? This is a textbook reversal pattern. And as long as we are above that 105 and change 106 level, valid reversal, right? And we have to start talking about higher dollar if this move sticks. So yeah, we're at a monster level here. This is an inflection point from an intermarket standpoint. The dollar holds this. If this is a failed breakout though, and we're back in the box, yeah, that could be the needed juice or intermarket catalyst for stocks to run into year end, right?
No question. Stocks peaked at the end of September, early October last year, depending on how you quantify what the dollar is. End of September. How'd stocks do? Stocks did great.
Yeah.
Stocks absolutely ripped for 3 quarters with that weaker dollar. And then on July the 12th, the dollar put in its bottom. And what happened? The new 52-week highs list peaked. Think that was a coincidence? I do not.
I know we've seen it too many times over the years now.
Yep. So that's the catalyst. If you're wondering what's going to take stocks higher, it's not the Fed or the Biden or the war or the inflation or none of those things matter.
The China, right?
The China, that's right. None of those things matter. The correlation has been incredibly strong between the United States dollar and equities, very negatively so. With dollar strength, we've seen stock market weakness. The last few months was no different, literally to the day. And then with this dollar weakness over the last few days, how have stocks done? Pretty great. So if the dollar rolls over here, we start losing 105, 105 and a half on the dollar index. You're getting this ridiculous year-end rally. We rip into the end of the year, new all-time highs before Christmas. Wouldn't surprise me at all.
Yeah, I'm with you. Listen, I do want to have a more serious conversation. I think I had a tough time kind of explaining myself and how I treat the events of the weekend in my investing approach and trading approach, right?
You treat them at all?
No, but when you say that, right, you run the risk of sounding insensitive, right? To say,
well, that's being sounding insensitive is never anything that I've been worried about in the past. I just tell it like it is, and and just to be clear, as terrible as what's happening in the Middle East might be, and we all agree that it is.
Yeah.
When it comes to making portfolio decisions, a war in the Middle East is not a factor. Like it's oh, shocking, there's a war in the Middle East. I can't believe it. Like, you can't dictate your portfolio decisions based on something that happens all the time. It's terrible, but these are two different things. These are two different conversations.
So yesterday we talked about maybe, one strategy that I like, that I just stole from Caleb Franson. He made a list of things that he will not do because of the war. Like, I won't sell material positions in stocks. I won't buy gold, right? Maybe that's a good exercise for all investors, because I think we do a bit of a disservice, whether it's the media or other analysts. Like, I was on a Twitter Spaces yesterday that we'll go for 2 hours just talking about what we're seeing in the market. What are the hot groups? What stocks do we like, right? What does this earnings report mean? They spent the whole 2 hours just talking about what the developments out in Israel this weekend meant for oil or defense stock.
You stayed there the whole time?
No, I messaged the host of the space and I said, I'm sorry. I said, I have nothing to add here. And part of me wanted to like jump in and say, guys, right? But I would have had a whole panel of 8 smart guys who I'm always on there talking about, who would have hated me. But I thought it was terrible. I thought it was a true disservice. They totally like fell into this trap. What we have to remember, you and I, right, as analysts in these periods, is that our expertise has nothing to do with that, right? So if I come on here and tell you buy oil this, buy defense stocks that, because no way. And guess what else I'm not going to do? I'm not going to go to Brian Shannon, Ari Wald, Frank Capillari, and ask them what they think about the war, because they're not experts in it either. So if
they
you
don't think about it.
I know. So if you have a bunch of guys who otherwise are on here talking about markets being true analysts, then all of a sudden they become war correspondents and geopolitical experts. Just run far, far away from them, right?
Chris Verone said it best. He said it on national television, a year or two ago. I'll never forget. He said it so perfectly. He's like, listen, guys, 9/11, government shutdown, whatever it is, all bad things. At the end of the day, as investors, we still have to decide, are we buying stocks or are we selling them? And that's what we're here to do, right?
That's
Not
it.
opine on whether, this president is better than the other one, or, this war is worse than that one. Like, that's, we'll leave that up to, warmongers or whatever, that's for journalists. We're here to make money.
Hey, I got more questions than answers as usual, but I do know price is going to reflect what's going on and what's being discounted based on these events as good as any analyst.
Yeah. Who are you going to listen to? A journalist or the price of assets?
The market will give you a heads up.
Come on.
How about we listen to today's guest a little bit, Michael Lee?
Yeah.
Should we bring him on?
Fairfield, you in the house. In the house, Fairfield.
All right.
Spencer. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Michael Lee looking sharp today, bro.
Yeah, gonna do Varney about 20 minutes after I'm done with you guys. So sitting in the studio.
So you're in the Fox studios right now?
No, local studio in Sarasota, Florida.
Got it. Is that where you're going to be on? You're going to be on Maria?
Varney.
Oh, all right.
Varney.
All right.
Our man Stu.
We're a great warm-up. A lot of our guests will actually do this, Mike. So come on with us.
The Fox interview is going to be the hangover after this one, right? That's what's going to happen. Looking good, bro. You look great.
You guys will let me get a little bit more verbal diarrhea. So.
Yeah. There we go.
Practice your talking points with us.
So what are we doing? We're just selling everything because we're at war now? Is that what we're doing?
Oh, no. First of all, you never ever sell everything. I mean, you might. Okay, I never will, and I'll never buy everything. You always need some cash, right? And so you can take that cash from 2 to 30 or 40%, right? But you always got to have some cash because you need to be able to buy something, especially money markets at 5.5%. Definitely want to have some sort of cash. Okay. What I've been paying attention to is this dollar movement, like you guys have been talking about, because to the day in the middle of July, it started on an ascent and everything has just gotten crushed because of it. And I would say it's TLT is like one of the things that I watch daily, that I hold, that has just been kicking me in the head repeatedly since the middle of 2021, right, or the spring of 2021. And so, I've taken that down because I always own TLT as a part of my equity portfolio. Instead of owning some sort of puts or having some sort of insurance strategies, I'll take TLT up from, I guess at certain points I've had it at 0, but generally on the low end from 5% up to 40. because you get that perfect -1 correlation to stocks when the bottom falls out, and when you're not in this kind of historic rate hiking cycle, you have a 0.2 correlation. So that TLT can do very well at the same time as stocks. Whereas when you have the vibrations in portfolio throughout the year, it is a nice offset. So it moves, when you look at it on the efficient frontier, like I do, it moves your whole portfolio up and to the right because of its negative correlation in times of crisis and low correlation in normal times. And that's how I'm trying to build portfolios. I'm using the efficient frontier with the small sample set, and I'm marrying that to my economic viewpoint going forward. And then when I'm making changes, I'm focusing very closely on a lot of what you two specifically have to say. Is what I'm seeing from, like, I'm looking at like a world, like I'll use the optimization, then I take like my overall macroeconomic view, and then I look at price action. Like, am I crazy? Because, like, what's the old story that it's like, you have a fundamental analyst, a technical analyst out to dinner, a steak knife falls off the table, and it goes right into the fundamental analyst's foot, and the technical analyst goes, why didn't you move your foot? You just got, the knife went right into it. And he said to him, I was waiting for the trend to reverse itself. So
I didn't think it could go that low.
but that's, so you can't, like, if you're right, it'll
then
be.
What did the technical analyst tell him? What did the technical analyst tell him after that? He says, "See, technicians."
Well, it's like, hey.
Well, he said that the fundamental analyst then says, "Why didn't you catch the knife?" He said, "Well, you know us, we don't catch falling knives."
Yeah.
So it's like, you need that price action to, like, if I'm right about my macroeconomic viewpoint, it'll be reflected somewhere in the price action, right? Because I'm not ahead of trends. I try to think like the people who are ahead of trends, and you will see some sort of price action as the smarter people are getting positioned.
So let's talk about individual sectors. We're seeing renewed leadership from technology. Communications has been a consistent leader all year long, including in Q3. It was the only other positive sector in Q3 outside of energy. So, this mega cap growth, and then mega caps in general, like, those trends continue to persist. The outperformance out of the biggest names, and we sit here all the time and we argue that, Amazon is a bunch of different companies, not just one. Google is a bunch of different companies investing in new companies, not just one. Apple, we know, is a whole bunch of different companies. So although we treat them as one stock, the outperformance out of these names is really a collection of a lot of things, right? How are you thinking about that in the fourth quarter? I know you might have some longer term views, but let's focus specifically on the rest of this year, maybe into early January. What are you thinking here sector wise?
Yeah, so tech and communications are my two biggest holdings. And that's so what you're saying is I'm seeing on my screens. And it's, if you think about it from a macroeconomic standpoint, if you weren't looking at my optimization or your technical analysis, okay, the economy is definitely slowing. So companies with the best balance sheets, the best moats around their business are going to do the best. And it's funny that these cyclical stocks, we used to call them, are now also consumer staples, right? Like, they have a ton of cash and they have defensive aspects to their business, but they also have the cyclical aspects to their business. And, like, from a personal standpoint, like, some of these companies need to be broken up because now you're destroying competition. But until they are, like, you kind of have the best of both worlds. And if you think about the majority of money flowing into the markets on an index basis, okay, out of every dollar that goes into a 401k, into an S&P 500 or MSCI World Fund, those companies are getting the bulk of that money versus everybody else in the stock market. And then, and then that's on the back of what happened last year. Stocks really got oversold, and, just like you get oversold to the downside, you're going to get overbought to the upside. There's a real momentum factor into it. And it's like, look, if you're our age and you're not going to be touching this money for 20, 30 years, and you're like, I got $5,000, I got $500, I got 50,000. I just want to throw in a couple stocks. I can forget about it. What are the names you're going to buy? So it all makes sense. And then I think, a lot of people talk about NVIDIA as a Ponzi scheme, or it's like one of the most overvalued stocks.
People really call NVIDIA a Ponzi scheme? No.
Oh, I don't.
It's a thing.
I think I think next quarter their revenue is going to come in close to 17 or 18 billion if they beat any, like on the low end versus the
How
last
is
two
that a
quarters.
Ponzi scheme? I don't understand.
Because people look at Yahoo Finance and they see 110 PE, right? Not realizing that that's like they've just taken the last quarter and extrapolated it out, and they're not really, the estimates aren't realistic. I think next quarter they're probably going to earn $8 or $9 billion, and then the quarter after that probably closer to 10. Because
sign
what
me
you
up
have
for that
going on,
Ponzi scheme, man. There's good money to be made in this Ponzi.
well, if you look at it with conservative estimates versus what they've done the last few quarters, just keep in mind they're going to net 8 billion next quarter, right? And the first quarter this year they did just over 6 billion in revenue. So this is an unbelievable growth because we don't really know what AI is going to mean to the bottom line for most of the S&P 500, for most of Russell 2000. But we do know you need massive investment to answer that question. And what you have, so that's what I call the gold rush. And in front of it, you have NVIDIA selling pickaxes. And they are like super extra double fancy, super duper expensive pickaxes. And so if you talk to people in tech sales, everything they're doing, like all this tech spend that's going into AI. And so,
and listen,
NVIDIA,
and
like
Mike Lee knows double sexy. I mean, if there's anybody.
What Mike is saying though is that anybody who's spending on AI, I mean, it's pretty exclusive. You need NVIDIA stuff. You're paying NVIDIA, right? Like they're the gatekeeper.
Yes, and like there is nobody that's like, you think like I have a daughter who's 11 but might be 15, and she wants to do exactly what her friends are doing. Okay, the only group of people who are more into what their other friends are doing are corporate executives. It's like, well, if the guy like we're public company ABC, if public company XYZ is spending on NVIDIA, our competitor, to build this chip, oh well, we need to do it and we need to do more of it, right? And it is this herd mentality is going towards NVIDIA. They are ahead of the game, and competitors will emerge. But it's like, look at Netflix, right? Like look at all the other streaming services and look where Netflix is. Like you have the first mover advantage. You are the creme de la creme. So like this NVIDIA, and then the other name I like, which really hasn't done well, and I've probably bought it at the wrong time, is ASML. Yeah. It is, they report coming up soon, but they make anybody who's seen Real Genius with Val Kilmer with all the lights, and they make EUV lithography machines, which like an economist wrote the article about them like 3 or 4 years ago called The Earned Monopoly. And they say all the technology they built is a combination of like miracles and magic, right? And so they have you can't build these high-end chips without their equipment that's sell for $200 million, and they have a software to go along with it. So as these production lines get expanded, this company's going to be romping. And like I was buying that at 30 times earnings. It's now getting like a lot cheaper. So I've started buying it like at 700, which is probably too high. I think now it's in the mid 500s. But that's another stock you can just buy it and put it away because they have a monopoly.
Throw up slide 3 here, Spencer.
No, this is interesting, Mike. I have some smart fundamental friends, and they are more excited and have been more excited about this one than any stock out there for the past several years now. Hear about this one over and over and over again. So now
ASML, the Dutch master. Throw them up.
Why this short-term weakness though with tech so strong? Any?
Look,
doubled in a few months, bro.
Yeah, but this is weaker than a lot of semis we're looking at. That's all. I was just curious.
Yeah, but this thing, think about how much market capitalization this thing added in the first half of the year. Like this thing added like $100-something billion. Like
wasn't asking.
So Steve, because NVIDIA gave us the largest revenue guidance raise and beat and raise in the history of the market, people expected something similar from ASML, and it just didn't. Like right now, no one is on NVIDIA's scale in terms of revenue guidance and beat, right? And so, like, think about that. You're going to almost triple your revenue in 3 quarters.
Like, has anyone, even in the big growth days for Meta, Google, no. I don't think anybody ever did anything like what NVIDIA is doing out here.
No, so a little bit of hype, and what I would say, like, this is the name, like, doesn't it kind of almost, if you have like a multi-year time horizon, like you could just buy it and forget about it. Because like it is a monopoly. This is where the tech spend is going. And so inside of that, and then the other thing is oil, like the oil stocks. And so you could buy the XLE, or you could buy Chevron, ExxonMobil, Occidental, because the backdrop for oil is, and unless you have a massive fundamental shift in policy in the U.S. towards fossil fuels, and Saudi Arabia like the price of oil is going to be high, right? And so there's some short-term movements. You got to remember this is controlled by a cartel. So none of these companies are taking their excess profits and spending it on R&D. It's going to all shareholder-friendly actions. They got burned by doing that before.
Right. They're not reinvesting. They're not building new projects. They're not putting more supply online. That might be the biggest theme in energy right now.
Yeah, they're buying back stock and paying higher dividends. And so that's a pretty safe play.
I know, but
so
what about the all the green stuff? We got to invest in the green stuff. Come on.
This ESG is
what a scam that thing was. Hell of a racket.
And the Inflation Reduction Act, it's like the Affordable Care Act. Like it's going to make there's nothing affordable about the Affordable Care Act, and there's nothing that's going to reduce inflation in the Inflation Reduction Act. It makes these things structurally higher. Look, and that's why you have this UAW strike, because you 40% labor to make an electronic vehicle, right? And these companies these automakers can't pay more money to their workers because they're losing so much money on these stupid electric cars that nobody wants. Right? Some people want to drive electric cars, but mostly people want to drive Teslas because Teslas are fast and they're cool and they're fun and they look nice, right? And they're so that doesn't extrapolate to like your Chevy Volt. I'm sorry, like there's nothing cool or fun or awesome about
when
that.
are the big U.S. automakers going to realize the point that you're making? Like you're totally right. What you're saying is people don't want to buy
after they're gone.
GM.
After they're gone, they'll be gone.
Well, spending a lot of
money is the problem on these
things.
Well, here's what's going on, right? And so we talk about the Fed. Like the Fed's own research is 18 to 24 months in lags, right, before the rates hit. I say this time is going to be longer because rates are so low for so long, and a rate hike doesn't affect you until you have to roll over debt. And so if you have to roll over debt, like you might be able to. There are people and companies that are going to go through this entire rate hiking cycle that don't have to roll over debt. That the last loan they got was at 4%, and the next loan in 5 years from now is going to be at 4%. And the rate hikes have zero effect on them. So,
not to mention the companies without any debt.
Great point, Mike. Absolutely.
Yeah. So these automakers, it's a debt-heavy business. They're rolling over a lot of debt perpetually. And then new car loans, like if you have an 800 credit score, like 9.5%, right? This is a devastating environment for them because the government is forcing them to make these electronic vehicles. Like there's the CAFE standards where under Obama, the fleet average needed to be like 50 miles a gallon, and Trump took it to like 30 and Biden took it back to 49. So he could say he was lower than Obama, but that's what's driving a lot of this. So they're saying like, hey, we've got to have this many cars that do this. So it's a lot of government regulation that's forcing them then in that direction. But look, I think these EVs are going to take these companies off the cliff. I think they're going to go through another reorganization. I think interest rates 6 months from now are going to be materially lower because right now you're like what's going on is like the Dutch boy with his fingers plugging the dam. And if you go deeper between the jobs numbers and a lot of other consumer spending data, like the bottom half of this country is totally and completely tapped out, just waiting for something to break. And we're just almost there for the labor market to really start falling apart. And because of the lag effect of these rate hikes, the rolling over of debt that causes bankruptcies, right? Because it was so low for so long and they stretched it out. It's taking a little bit longer, which I think why people were probably a year off in their recession prediction. So I'm nervous about next year. I think you need a recession to clear things out. I think I'm hoping TLT can hang in there because I'm not smart enough to sell it now and buy it back lower for the hopes of riding it out. So that's my hopefulness for the market. And then I own an interesting gold play, which is IGLD, and they basically write cover calls on GLD, and it produces an 8 to 9% covered call. So if gold spikes 20%, you lose a lot of that upside. But my view in the risk in gold is owning a dead asset as it has been for forever, right? And so if I can buffer any kind of losses or generate a little bit of income on it, that's how I'm owning it in my portfolio. I think I'm at 7.5%. The highest I'll go in gold for my equity portfolio is 10. That's kind of where my position limit is. But it's just something I I want to, over the next 3 years, have a similar S&P 500 return with a third less vol. And so if we have a dramatic sell-off at some point, I want to dramatically outperform and miss some of the upside on the other side, so that net, I'm at the S&P 500 with a lot less motion in the ocean.
And I think it's important for people listening out there that, not every investor is the same. There's a lot of professionals in this business that have certain mandates and certain strategies, and you're hearing one of them is different than a lot of other things you're going to hear. Mike and his clients have different time horizons than other people that you're going to hear, things you're going to hear from us. There's no wrong way to do this. People are trying to do different things in different time horizons. And Mike, I like how you put that. You're looking for S&P returns with lower vol. Yeah, I get that, right? It's much different than Strazza YOLOing, selling puts in AMD last week, like that expired like in 2 days and stuff like that, like night and day. So it's important to reiterate for those listening out there how many different types of strategies and goals there are among investors.
Yeah.
Well, listen, I would have different strategies if I was as smart as Strazza.
No, you're funny, Mike. Listen, I learned some things from this conversation.
Listen, Fairfield U? Strazza, did you graduate from Fairfield U, or is that just your master's?
Master's, but you have to graduate to get your master's.
Is that how that works? I didn't do the master's thing.
I graduated. Yeah, dude. Stags. Hell yeah, 3 of us.
Fairfield Stags. Let's go, baby. Let's go.
All right, guys.
All right, Mike, go get him.
Thanks for coming, Mike.
Thank you so much for having me.
Fox people, we said hello, all right?
Go get him. He's awesome.
Mike Lee.
Full of information, though. Did you hear all those factoids he's dropping? He knows a lot about these companies. We should have more guys like that, right? Because we don't spend.
He's like a Matt Warder type.
Yeah, right? Like come on.
Less commodities, though, more.
Yeah. Tell me what this coal company does. Tell me what, I thought it was interesting what he said about Ford and GM. There might be something there. I mean, they are spending a crazy amount of money. How long do those yields hang in there?
Mike Lee leans right. Why don't we bring someone who leans the other way?
That's fine. I don't think he sounded nothing political about what he said, was there?
Yeah, give him a couple beers.
No, JC, I think that's a good idea just to balance it out.
Yeah, for sure.
I don't know who that person would be, but
we do, Spencer, right? Like, just to be clear, we're not going on here like, oh, this person's a Democrat or Republican. Like,
no. Like bring in like Mark Dow. Get Mark Dow on here.
Actually, I DM'd him yesterday. Funny you mentioned that.
Nice. Mark Dow, love Mark Dow.
Yeah. All right.
Bring in Kimmy.
Oh, okay. I can do that. Kimmy, are you ready? Make sure she's
always ready.
Okay, she's ready. I'm just checking. Jeez Louise.
Kimmy.
What's up, guys?
What is happening?
Who'd you have on this morning?
We had Mike Lee. Do you know Mike?
From where? No.
Mike Lee's an advisor.
Oh.
He's actually an old buddy of mine, coincidentally, from Fairfield. He was captain of the rugby team, and he was a year older than I was. So let's just say, we had some good times together. We had some good times together back in the day. Look at us, all grown up. Look at us. All right, so Kimmy, on Columbus Day, happy Canadian Thanksgiving, Kimmy. 5 for 5 yesterday. Long Meta, Shopify, Amazon, Disney, shorted CrowdStrike. 5 for 5 on Canadian.
Well, Disney, it did go, but I got out because I was running to the store. I said, it's moving slow. And then the second I went to the store, it popped. But others in the room stayed with the trade, so that was good for them.
I like where your head is at on this Cloudflare, Kimmy. I think your head is exactly in the right place.
We'll see.
As is usual, by the way.
The name has been stuck. You see how look at the chart of it if you want to pull it up. So I'm kind of like watching it, but that doesn't mean it's gonna go. I alerted the room last week around 58.80 or $59. Wait, where is it now? It is
Cloud?
It's just 65, 64.
Right. So I alerted it last week when it broke through the 200-day around 58.90 or so. And that was like my trigger. I said, if anyone had an interest, you could buy it. Now it's here. This is where it has kind of stopped in the past. So we'll see. So, we got to see if it pushes through, heads to like 65, 66 area. And that's really another resistance level for this name.
This thing's been basing for a year and a half almost.
Right, exactly. So,
Huge
I mean, it could
base.
be just like nothing, maybe you capture a little bit in it, or maybe
it's been a monster correction for software stocks in general, Kimmy, and we're seeing more and more of these popping up. I think you're dead on. And again, whether it's Cloudflare or other software stocks that we've been pointing out, we talked about some of these cybersecurity stocks. Those are software. There's opportunity here. I think your head is exactly in the right place.
Now, what's Palo Alto? What is that? Is that another?
Yeah, PanW.
It's cybersecurity.
Yeah, cybersecurity.
Software. Don't you love how I know what companies do? I'm like, what is that thing?
Oh, that one's right up there.
It's up there too. We'll see if it breaks out to a new high. PANW.
Yeah, Palo Alto, PanW. So that's cybersecurity. It's software. You're right there. And there's like a fine line between what's software and what's cybersecurity software. So.
I don't even understand all that stuff.
they're all kind of the same.
I certainly don't either, Kimmy. Don't worry about that.
I just want my computer turned on every day, and that's it.
That's right.
I don't know what they do, but I know they all trade together. So let's just go with that.
How are you feeling about the seasonals here? This buy in October and get yourself sober. Well, guess what? Here we are, October the 10th. Are we seeing that turn into the year end? Does this smells like it, doesn't it?
Yep. We obviously have some headwinds. We have war going on.
When do we not?
That's true.
Well, I mean, last week there was less war than there was this week. So.
Correct.
All right.
So I'm thinking if we kind of hang on, I know we are way above that, but I think if the SPYs kind of hang on to this 425.50 area, there is potential for the SPYs up to 438. Near term potential. So we got to see how it holds on. We're above certain moving averages, and we have to see if we continue higher from here. It could be a little, basing and then push higher. Do you think we start to go, JC? I mean, we have already started to move from Friday to today.
Yeah, I do. And I think it's a combination of sentiment. I think it's a combination of the follow through and the reversals that we saw last week. And I think, as usual, it comes back to the dollar. That dollar weakness started coming in. How did stocks react? They absolutely ripped. If you see that dollar index breaking 105.5, 105, it's gone. And we're ripping to the end of the year. Could see all-time highs in the S&P 500 and NASDAQ before Christmas.
Right.
I think it's all about the dollar. That's all that matters here.
Right.
The Fed or the Trump or the war or whatever. It's the dollar. The dollar rolls over. Stocks are going to rip. That's it.
Yeah. So we're you said you're going to Chicago?
I'm going to Chicago tomorrow. You want to come meet me?
No. It's a little cold there now, right?
It's going to get a hell of a lot worse in a few months, so I better get it out of the way now.
It's getting there. They're on the way.
What are you doing in Chicago? What's there?
Just a little chart session at the Chicago Board of Trade. No big deal.
Oh, that's cool.
Some adult beverages afterwards. Yeah. It's a beautiful. I mean, it's like I explained to my wife. She's like, "What are you doing in Chicago?" So I was like, "Oh, I'm going to speak at the Board of Trade." It's kind of like the New York Stock Exchange for commodities, but not as old. That was probably the best way.
Yeah, I went down there because I used to have to go there for business when I was on the institutional side, and I just it's a great city, and but I did go to the Chicago Board of Trade, and I got to see how they it was back then it was crazy,
If you're in Chicago, Rip, come say what's up. Spencer, can you drop the link if anybody who hasn't registered, if you're in the Chicago area, if you want to fly in, Mary's going to drive in. What I like to compare Chicago and New York, when you're like at bars and like clubs in New York and you're like in line for the bathroom, like the guys are talking about stocks and IPOs and da-da-da-da. When you're in Chicago, they're talking about commodities, they're talking about options. Like in the same environments in New York and Chicago, it's the same bros, if you will. Just the conversations are not about IPOs and stocks. They're about options and commodities. It's funny, right?
Well, you want to know about the bros and everything. So when you're in New York, the bros in New York are short and small. When you're in Chicago, they're like 6'2" and above.
Because they all played football in the crowd.
Irish lads, big, tall, 6'2", 6'1". I stood there. I mean, I'm short, so I'm in. You go there and you're like, oh, New Yorkers are small. You could see them, down the street, and you see a tall guy every now and then you see in Chicago. It's like, woo.
I feel like you have a higher percentage of pros or bros, as you call them, that were former athletes than you do in New York.
It's because there's more Jews in New York.
That's right. Jews are short.
Is that what it is?
Yes.
Is there a lot more Jews in New York than in Chicago?
Yeah, there's way more. Yes.
There's way more.
Yeah.
And then because just the Jewish
Jewish
community runs Wall Street.
And Italian people are short. A lot of Italians.
That's also true. The Italians are not tall as well.
There's definitely way more Jews on Wall Street than Italians.
Whoa.
Except my brother. I have one brother at 6'2", and I did not get the height.
Strazza's like, I'm Italian and a former athlete. Hello.
Who?
Strazza.
I think the bigger point is just how many athletes are working at all the Wall Street.
Strazza, you're not so tall yourself, are you?
He is. He's not short. Strazza's not short.
Kimmy's on fire this morning. I round up to 6 foot. I round up to 6. So.
No, you do?
I mean, if you're 5'11".
Strazza's not short. He's not short.
Okay, that's not short.
All right.
And sir?
Yeah, what do you think, Kimmy? Come on. I
never met you.
I'm a Jewish guy from Jersey. I'm like 5'10". Yeah.
Go see. Hey, Spencer, when you get a chance, go down
5'10" on a good day.
Go to Georgia. See Kimmy. She needs to measure you.
5'10" on a good day. 5'10" on a good day.
Go get it. All right, Kimmy, go get him, Tiger. Go get him.
I'm 5'2".
All righty.
See, Kimmy, she's fine. Kimmy's fine.
She
Whatever
trades.
she's doing, just keep doing it.
She trades live in her trading room every single day. She calls her trades out as she's making it. If you want to learn more, check out the link in the description to God bless you. Okay, let's move on here. Actually, I have a question for you, for either or both of you. Does this count as a breakout for Meta, or does it have to get to that 326 level for this to count?
I mean, it's still in a range. Like it's still below. Okay. It's still below the July highs. Yeah. Is that what you're asking?
Yeah, that's what I'm asking.
I think it breaks out, man. The problem with this thing, and we talked about it last week. The reason we don't have a trade on it is because they got stupid earnings in a few weeks. So volatility is already expensive. I really wanted like a straddle on something like that, or even just long out of the money calls, and just we've got it in Google, so we're not in it. But Meta specifically, I really like this trade from the long side, and we're not in it. For the reasons that I said. It's expensive.
I'm in it. So I don't put on all the trades that we obviously write about because that would be impossible. So I have to pick and choose. And I was complaining to Sean yesterday. I was like, I have no Google. I'm freaking out. I got no Google. How did I mess this up? And he's like,
so we are in Google. So you're that's why you're making up for it by buying Meta.
And he's like, I have no Meta. I'm like, oh God. All right. Well, between the two of us, we're covered. These communication stocks are rocking. I think it's a foregone conclusion. These things both back to all-time highs. I know that maybe that's not an attractive trade to a lot of people because they're talking, I think, 15, 20, 25%, depending on if we're talking about Google or Meta. But, dude, straight higher, at least in the case of Meta, straight higher off the lows from last year. Literally, this was a V bottom. And now it's just been tight here since July when stocks started correcting. This one's been correcting more resiliently than anything you'll find out there, Meta. So I think, God, if and when the market finds its footing, just broke out, made new relative highs yesterday. This thing's well on its way. So where would that put it? Meta at new all-time highs. We're talking about like 385.
Yeah, from last year. All right.
I got a chart quick.
You got a chart? Okay, what do you got?
Yeah, I got a chart. I tend to. I don't know if you heard. It's like it's my thing. So I want to throw up slide 3 here. And this is a chart of a very important index. It's one of the most important indexes of them all. And this is the S&P 500. And this is kind of how I see it. And these lines were drawn there for quite some time. This is an old chart of mine that I just happened to pull up. And notice that support over the last couple of weeks at 4,200. How many people at the chart summit, smart people, mentioned that 4,200? I know Mike Hurley, Ryan Dietrich, I think also did, Frank Kapp.
It's the whole zone, right? Whether they were talking about the August highs, which are more like 43, or those February highs, which is like 41, 50, 42. It's that whole, block there. Everybody is drawing their lines there. Thicker the better for this one. The thicker the better.
What do you think? We head towards the upper end of the range?
Yeah, right. So we're digging in. We're holding those August highs, such a big level. I think we scoop and score here. We get confirmation on a reclaim of the pivot lows from August. And then I think the way you drew this is nice, right? Because if that is a failed top, I don't think we just run right back to the high of the head, right? Probably going to overshoot and go back to those old all-time highs and maybe more. I think, like you said, this got kicked off with nasty sentiment, 3 months of selling, everybody starting to question the bear market, breath completely drying up in the U.S. and internationally. Things are getting dark here. We get the failed breakdown, a perfect shake and go on bad news, on a new war. I just climbing that wall of worry. I think the puzzle pieces are really falling into place.
But bad news for who, though?
You know what? It would be so classic for the start of a new war to coincide with
market. Of course, I understand what's going on in the Middle East. I'm talking specifically for asset prices. What is it that's so bad about a war?
For the market?
Historically, it's not too great.
JC, the narrative is that it's bad. And I don't want to get into it. I don't think we need to.
I know, but doesn't the data suggest it's the exact opposite? Isn't
Well,
wars great for stocks?
Absolutely.
No,
absolutely.
So then why would people think that this time is going to be different?
Because they're humans.
It's very simple. No, it's very simple. War creates unknown. We know the market and uncertainty. We know the market in theory doesn't like that. That's all it is. That's the lead.
We know that the market does like it.
Usually, you get immediate.
No. Not everyone knows that. No, you know that. Not everyone knows that.
Typically in wartime periods, and the cycle has sped up, right?
It's free information. Like everybody has access to it.
Right. So typically in wartime periods, you will get an initial reaction, right? Downside volatility, short term.
But this time we got the opposite.
We didn't get it at all, right? Because it really doesn't affect us yet.
Right, we didn't get downside. We got upside.
Well, futures open red. Right. Okay. And war breaking out.
And did Charlie Dow teach us that the open is the most important price or the close?
I'm not here making the case. I'm not the one to argue with. I'm on your team, and you know that. So I'm not the one for this, right? But what I would say, and Spencer could probably speak to this a little bit better because I really haven't read up on this at all. The real risk here for risk assets that most of us know and own is that the U.S. gets involved somehow. Is that right, Spencer? That's what all the rumblings are.
I mean, they're already involved by
default. Sounds like it's good for stocks. Sounds like it's good for commodities. Sounds like it's good for a lot of investors.
There's always an initial concern that the war can be more than just what it starts as, right? Other parties get involved.
Yeah.
That's fine.
It's the times of uncertainty, because when you compare it to all those times when there's so much certainty,
Well, I mean, in peacetime, sure.
What is even peacetime? Like, what even is that?
War makes people scared, and when they're scared, they tend to sell.
But they don't. They actually buy. We know.
Okay. I'm saying when they're scared, I should have said they want to sell. Maybe they don't sell, right? Or they want someone else, right? I look forward in a year or two to seeing another one of those 30-year S&P charts that has the list of all the scary macro things that happened over the course of the time, and then this will be on there.
I was thinking about that yesterday. Listen, I think we'll get into this more. We'll give it its justice on Spaces at 11 o'clock. We'll go through the war stuff.
And we talked about this yesterday. There are trades to be had, but and the data, by the way, is in. I saw it in the chart report today. Ryan Dietrich had a good table with, the market's performance during periods of conflict. Okay. Before we get to that, though, let's do some individual headlines here. We had an earnings report this morning. This one was very interesting. Pepsi, they blew it away. They crushed it. Their report was good, and then they raised their guidance on top of that. Although from what I'm seeing, most of that is due to pricing increases and not volume increases. So interpret that how you will. They're not selling more goods. They're just raising their prices on their goods. But anyway, earnings good, guidance raise, and then they also, on top of that, downplayed the Ozempic scare from Walmart last week. They said
they came out.
They haven't seen anything to know.
They basically came out and said, "This is ridiculous. Stop it." And I appreciate that.
Good for them.
Yeah.
This is dumb. Stop.
What is wrong with Walmart? Come on.
Nothing's wrong with Walmart. They're making all-time highs.
No, they're the ones who broke this whole thing about the diet pills affecting their sales.
Yeah, they'll be fine.
I know. Spencer, did you see the write-up about Costco, the men's clothing at Costco in the weekend journal?
What?
Yeah. Yeah,
no?
So you would love
They're
that.
going to start selling men's clothing at Costco?
We'll cut out the off-duty. And it talks about how there's an underground, underground community that just loves Kirkland brand clothes. That was really, really funny.
Yeah, they're not bad. They're fine.
And who actually makes the Kirkland brands?
Costco.
Like, you know how
Costco.
But you know how the Kirkland vodka is
no,
Grey
they don't.
Goose or whatever, and they just call it Kirkland.
There's no way Costco makes their own clothes. I don't know who makes them.
Their brand. I'm sure they're being made in Vietnam or China, but it's
by another brand though.
Oh yeah, it's like a white label thing. Yeah, I don't know.
Yeah,
but
all of Costco's stuff is white label. But anyway, what else did I want to say? So we had Pepsi. Oh man, Steve, I saw this headline yesterday. I thought of you. From Bloomberg. We were talking about this yesterday about Bank of America or the banks in general. Here's the headline. Bank of America's wrong way rate bet hurts Moynihan's growth pledge. Basically, they are stuck with a shit ton of long-term bonds that they loaded up on during COVID and sitting on serious paper losses on those positions. So you asked the question yesterday, is the market really ready for the news that these banks have to deliver, even though they've all gotten killed? Are they really ready for
banks
it?
Banks are ripping this morning, I'll tell you that much.
And you got me thinking they're not. So classic sell the rip. I don't know, but I saw a headline. I thought that would scare me if I owned banks, which I don't. Totally, but if I did,
here's where my head's at. Right, so Bank of America is going to have to come out here and report. Are they Friday or no? They'll be early next week. I think they're Tuesday. Yeah, Tuesday. So they'll be early next week. Listen, the stock just made new multi-year lows last week. So did the market do a good enough job? Everyone and their mother knows that the banks are going to come out and report a terrible quarter, right? So has the market done an appropriate job of pricing in that bad news ahead of it? Right?
Bank of America just got cut in half, dude.
That's my point. So a situation that we could be walking into with these banks is the market maybe overdid it, and these stocks were discounted appropriately, and they come out and they throw out this terrible quarter, and maybe that's the low, right? So that I'm open to that, but they're very vulnerable here. City looks terrible.
Or didn't do it enough. Yeah. All right. What else did I have here this morning?
I want to show you why I'm buying Bank of America.
Oh.
Okay.
I mean, look, you can make. I get it. Look at Citi. I think Citi's an even better setup. Look at that bullish momentum divergence.
Settle down there, Baba Louie. Throw up slide 3.
I get it, but you don't want to put that trade on today.
I am.
No, ahead of earnings. Come on.
Oh, when's earnings?
Next Tuesday.
Oh.
Yeah, you got to wait, and a move is going to happen, and you're not going to have that clean level.
Damn.
Yeah.
Oh. Stupid earnings. It ruins all the fun.
4 times a year, we got to put up with this shit.
It's bullshit. It's communism.
We should just do it like China, where earnings don't matter.
Some would argue that they don't.
Oh man, that's going in the bank. We should do it like China.
Hey, throw up my.
Let's just make up a number.
We should do it like China. Yeah, it's working out so well for them right now.
That oops move right on that gap up from 2020. Man, this is a perfect place for Bank of America to squeeze. Momentum remains in a bullish regime. Man.
Throw up the M-Chai. Let's talk about some other things that Steve bought yesterday. I think China is set up for an absolute face ripper. A lot of these charts in the laggards look similar, right? I really like trading these patterns. I think it's a bull market. I think the laggards have to play some major catch up here with the leaders. I think China's going to
tell the kids what the M-Chai is.
This is just the MSCI China ETF. I think it's iShares, right? So it's same thing as FXI, one of the big popular ETFs. I did not play it through the ETF itself. I'm in JD calls. I also own some Pinduoduo, and I already had TAL education. I think those.
I was going to say TAL making new highs today, up 6%.
What is up 6%?
Wow.
Yeah. So TAL, me and Sean were talking about this one yesterday, and I was telling him I'm holding on because we're both in 1020s. Our options expire in 10 days here, right? So that data is really working against us. If this stock's not moving higher every day, you're probably going to want to exit those options. But I really wanted to see,
unless you're in the money. If you're in the money, you're better.
We are. We're 7 strikes, but the data's still working against you here with 10 days to go, right? So I really said I want to see $10, right? Those December highs from last year, and it looks like today's move is just about going to get us there, maybe tomorrow, right? So I'll be out. I'll be out of these towels. Pinduoduo is breaking out. The reason I did JD, if you look at JD, I mean, you can't find a worse chart. This thing has some serious juice, and it's not uncommon for a stock like JD to move 5, 10, 15% a day or in a couple days. So I'm in some short dated calls. I think China might scoop and score here. Maybe these things will work. So we'll see.
What about a little chart report action?
Yeah, just a couple of headlines I wanted to get through first. Unity, their CEO stepping down. They named the new CEO yesterday, and they also reaffirmed their guidance. So James Whitehurst is the interim CEO and president. He's from their board. So Unity is trading up this morning on that headline. So, well, it was trading higher, but still up, still in the green. Couple of international earnings that have not reported yet, but are going to LVMH, Louis Vuitton, and Samsung. When Samsung's report's probably going to be pretty bad. They both trade OTC in the U.S., so if you trade OTC stocks, relevant to you, but just want to keep an eye on those. And just a couple macro headlines. Nothing super important on that front, though. IMF. Whatever. I don't care about IMF. Anyway, okay. Chart report. Yeah, got some good ones today.
Yep, I like it. All right. I like Larry Thompson, Larry in the house, showing that small cap ETF IWM at the bottom end of its range, catching a bid. I think, this it's a great chart of the day. Great job by Larry pointing this out. We've been talking about it, of course, here. Look at that range. We're at the bottom end of the range. Does it break? And then we lose those 2018 and 2020 highs, and that's a big problem. Or do they dig in here like they have since last summer and rip them? I think they're going to rip them. And then the other chart that I wanted to mention was the spoke.
Hold on. So I like Larry's chart here. I saw it yesterday when he tweeted it. But I don't like the idea of IWM as a vehicle, right? I think this is a great chart, but it's for information. The 3% for 13%. Go pick another vehicle if you think you're going to see that 13% in IWM. You'll do a lot.
You're going to get better beta in an equities in a stock.
Right.
Yeah, especially something already showing relative strength. Agreed wholeheartedly. But again, it depends on what you're trying to accomplish, Strazza. Some people, their mandate and their goals will force them into the ETF, and that's okay. For those people who have other options, there are better options. And then the bespoke one was I just thought it was hilarious. The bond market, best day in 20 years, the day the bond market's closed. Just funny.
But how could it be the best day if it's not open? Oh, TLT.
For TLT.
Right. I like this one from Dietrich. Where was it? There you go. Geopolitical events, what the market did. Again, most of going back to the conversation we were just having. But conflicts, generally speaking, are...
War's good for stocks. You might not like it, but that's just data.
I was going to go quite that far, but yes, the market is generally higher after.
It's inflationary, right? The theory is because they're producing. There's a lot more demand for all these natural resources. And then because these natural resources are used without any sort of economic growth because of it, they're just destroyed. So it's inflationary. And it's good for stocks too. Stocks love it.
Again, I will just say, love these stats. It's such important perspective, but so is a chart of the S&P 500 zoomed out a century.
That's right.
That will tell you the same thing.
Yeah, this isn't the first time that there's been a war.
I was just looking at this list more closely. Yeah, I remember those drone strikes at the Aramco facilities a couple years ago. And then like nothing it was like a nothing burger. Like, I don't know if you guys remember that, but there was like a bombing at the at Saudi Aramco pipeline facility. And then like nothing ever happened with that. It was just like a one-time thing, super random.
Yeah, but the weird thing that happened with the Ukraine pipeline too. Did these guys like bomb their own pipelines to like throw off?
Yeah, no, I don't know.
Right?
I don't know. That was super. Yeah, that was super random. Yeah. It was like I remember that you wake up that morning and the market was down, and like by the next day it was like back up again. It was like,
I love the chat here. I didn't know this about the Kirkland golf balls.
Okay.
Strazza, you're going to hit them into the water, whether they're Kirkland or Pro V1s. It doesn't matter. It's not going to help you, bro.
Not true.
Okay.
What else?
Yeah. Strazza's somehow a worse golfer than I am.
Hot corner quiet again, right, Strazza?
Literally nothing. I don't agree with that statement. Literally nothing today. So no Form 4s, no 13Ds, I guess. Executives and investors came in. They were just scrambling over these headlines from the weekend. They didn't have time to.
Yeah, but this is yesterday. So are filings even open?
That's actually a good question.
I don't even think they were open.
I think you're right. I think they were not.
Yeah.
Because
it's the government that's closed.
Yeah.
They should stay closed more often. Things were pretty good yesterday.
You would think they would leave their portals open for something this important. But yeah, you're probably right.
But the government, common sense, like, come on. They're not going to start using common sense now.
We don't get them over the weekend, probably for the same reason. So, yeah. All right.
A couple interesting ratings as far as ratings go, but Rivian getting an upgrade this morning from UBS to buy. I thought that was fun. They are defending the stock. I think it got a downgrade or two last week. So UBS coming to Rivian's defense this morning, and EA also getting an upgrade from Bank of America.
They're still around?
EA is still around. They're one of the only there's been so much consolidation in that space over the last decade or so. There was like 3 publicly traded video game stocks left.
Hold on.
One of the messiest charts you'll see
on EA.
This chart is disgusting.
What's disgusting about it?
EA Sports.
What's disgusting about it?
Awful. Straight sideways. EA is below where it was at the 2018 peak.
Dude, this is one of the cleanest consolidations on one of the most epic structural uptrends that you're going to find in this market. When this thing starts taking out 150, this thing's going to 240. I don't know what the problem is. What is your beef?
There's actually a big problem.
If it ever gets to 150, I don't.
There's a big problem.
It's consolidated. This thing went from 10 to 150
yeah, it used to be a great stock.
In 5 years, and then has been consolidating and digesting those gains in a perfectly normal way. What's the problem?
They were all great stocks at one point. You say the same thing about Activision, Take-Two. They're problem stocks now. The industry is trying to figure it out. The video game landscape has changed.
I think whatever they're doing, it's working. Can you throw up slide 3
not working.
Here?
They're below where they were in 2018.
Look, zoom out, my friend.
I can show you stocks that are up 4 or 5x.
It's a 15x off the lows. Throw it up, Spencer.
Slide 5 years of dead money. I'm with Strazza in this one.
This is terrible.
Man, I think it's just ready to go. I think it's ready to go. We're going to be right here on the best morning show in finance, talking about EA at new all-time highs. And I'm not going to say I told you so. I'm just going to say, oh, now you like it. And then to Strazza's credit, he will like it then. He will buy it then. And he'll be like, but it was ugly then. I like it now. And he'll be right.
I've owned this stock plenty over the years. I'm a fan. I'm a big fan of EA Sports, okay?
Well, first of all, it's not EA Sports. It's Electronic Arts. Their sports is just one of...
Yeah, EA Sports sponsored my childhood, so they're great. They're good by me. So I've been involved, but no, it's been a mess. All the Activision, I think they're still trying to get a merger done, which seems like it might not.
No, it's not. No, it's there.
Okay, it is.
Yeah,
it's because it's taken Spencer forever. Like, wow.
I know. No, it's there. It's done. It's
$35 billion company. This thing, I don't own it. I'm not going to own it for the same reason Strazza doesn't like it. But I think this breaks out to the upside. We start taking out 151. Speaking of my childhood, and then we're going to head up towards 237, 240.
I will say sentiment is interesting for these stocks because these were like very loved names, like JC saying they were secular leaders. Everybody talked about them all the time. These 3 video game makers, Activision, Take-Two, EA, and you never hear about them anymore, right? They're not in the growth indexes. They're not considered like, with these speculative stocks that are fun and move a lot and give you all the beta. So maybe with sentiment in the dumps, you got a monster consolidation.
Fun fact, Mr. Strazza, Electronic Arts considered a communications stock.
Yeah, content.
I just put up ESPO, the esports ETF, which was like one of the darlings of a couple years ago.
How is this still a thing?
What do you mean? Esports is not nearly as dead as other industries.
The ETF is what's dead. There's nothing in there. Doesn't trade.
It doesn't need an ETF for this.
It doesn't trade.
I don't know.
Tencent, Nvidia, Activision, AMD, NetEase, Nintendo, C Limited, EA, Aristocrat, Leisure, and Take-Two. It doesn't trade. So this is one of those examples where we use the ETF. It's a great ETF to find stocks that have exposure to that gaming space, right? But then you don't buy the ETF. You look at the individual components, right? So another one of those examples. There's plenty of them.
Right. Should we bring on Patrick here? We got Pat. All right, Pat, what's going on, dude?
Are we not running bumpers today? Because I would love to just have a chance to blow my nose every now and then.
I already ran the bumper for the. You already run
in
again?
The house. Diddy, what's up, buddy?
Steve and his bumpers.
He loves a good bumper.
They are nice.
Pat, do you have an opinion on EA? Is it hideous or is it just consolidating after a big move?
I think Steve made a good point there. You really don't hear about these video gaming stocks too much anymore.
You don't.
Not too much of an opinion here.
Okay.
You don't like my chart? I mean, consolidating, multi-year consolidation after a 15-bagger. Excuse me. Are you not entertained?
I'm entertained. I might just need a little bit more time. I mean, look at that sideways. That's a weekly, right?
5 years. 5 years of consolidating a 15-bagger.
So what's to say we can't have 2 more?
You're not wrong. I don't think it's going to take that long, but fine. Yeah.
Hey,
Listen,
speaking
everybody, set your alerts at 150, and we all buy the breakout together. How's that?
Deal. Speaking of upgrades, Pat, did you see my message this morning? A couple of stocks that you highlighted in the Buzz report this week also got upgraded this morning by Bank of America.
Yeah, I think the analysts there are reading the Buzz because that's too much of a coincidence. 2 out of the 3.
They might be. OHI and SBRA, Sabra, are the tickers that Bank of America is highlighting this morning. They are 2 of the better performing REITs this year. 2 of the only good ones, actually.
Yeah, how about that? 2 REITs that are positive year to date. I mean, that's rare enough. But yeah they're both nursing home REITs. It's not really an area that you hear talked about much. First of all, relative strength in real estate and REITs, you don't hear about that much at all. But I was really surprised to see these nursing home REITs are where it's at. If you got to be in REITs, that's where it's at. Nursing homes.
That is where it's at. We looked yesterday at all the REITs year to date. Like 190 of them, and like 9 are positive, and like 6 of those 9 are nursing home REITs. So
or healthcare related.
Yeah. I guess if you have to.
hey, JC, why don't you do a rundown? It's 9:51 here. Market's been open for 20 minutes. Are we seeing follow through on yesterday and Friday's action?
Well, we're not seeing follow through here. Dow futures up 40 points, S&P futures up 20 basis points, NASDAQ futures up about the same. 30-year bond futures down 80 bips, gold flat, silver flat, copper down almost 1%, oil down 50 basis points, really consolidating those gains from yesterday. And then the dollar mixed here overall with volatility and rates down. I don't want to say, 10-year down 10-year down quite a bit.
So the consumer groups are out here leading today, both staples and discretionary strong. Tech about unchanged. Looks like real estate, healthcare, your laggards so far today. But pretty much all green on my screen from a sector perspective. Even healthcare, which is the worst sector today on an equal weight basis, is just unchanged.
Got to point out the strength we're seeing this morning in financials. The XLF up 50 basis points. Regional banks up 1.4% on the KRE. You know, there's something fishy going on. I like this Bank of America trade. I might just buy an ETF, actually. I really like the Bank of America trade. I'm not going to lie.
On that failed breakdown?
Yeah. I really like that failed breakdown. But I just don't. I hate the earnings situation. I really hate it a lot.
I mean, I guess calls would be tough too because implied volatility is probably.
That's exactly right. That's exactly. There's better trades, but it doesn't change the fact that I like Bank of America. I'm just not going to own it.
Why not just buy some common and be okay with the fact if they miss, maybe you lose 5%? I mean, they've already priced in a miss.
Nah, I'll find a different way.
Yeah,
I'm not going to be in Bank of America specifically.
Bank of America doesn't typically have the biggest earnings moves. I mean, none of the banks do. Right?
I'm just trying to get involved with that.
Spencer, what would you say the most important bank's earnings in these next?
JP Morgan is the JP Morgan is the king of the kings. JP Morgan or bust.
JP Morgan is the king of the kings. What about Goldman Sachs?
It wasn't always that way.
No.
You know,
what's your beef for Goldman Sachs?
Their size. It's just smaller than the other ones.
They're still huge. Listen,
they're big. I'm not saying they're small, but they're small compared to.
Oh, but Spencer's right. Goldman's 100. JP Morgan's 430 or something.
You know what it is. You know what reports are more important than the money center banks this quarter? Your
regionals.
And all the big.
But there's too many of them. There's
so many of them. They got to get rid of some. Unemployment's too low.
There's a lot of banking analysts that are going to have to go and dive into these reports and try to figure some things out. So that
can you imagine being a banking analyst? Can you imagine that's your life?
I can because I have some friends.
Oh,
yeah.
Well, I mean,
what do they say? They're happy to go to work on Monday.
Yeah, I don't know, man. You know, they're doing their thing. They got families, 9 to 5. They're okay. I don't know.
Hey. You guys interested in this Sphere stock, this Las Vegas Sphere? Do you guys know about that?
How dumb!
Yeah, it's Dolan. Speaking of Fairfield University, that's Dolan, baby.
Yeah.
I think this is like his last. I think he's all in on the Sphere.
Yeah, SPHR.
Is this a hard to borrow? How hard is it to short this piece of crap?
Oh, that's a good question. I don't think so. This move does not tell me that it's hard to borrow. It's not going parabolic. It might not have the biggest float in the world, but it doesn't make it hard to borrow. Let's see.
So let's just talk about what this is. This is a theater in the sky with a giant like LED screen, right? So you just take enough acid and go and watch the giant movie and U2's playing there. Like
yeah,
I don't.
Yeah, kind of
on Instagram too. I don't
know. Short float in the single digits, so you're okay there. Days to cover 4.5. You're okay. That's not insane. It's maybe a touch high, but
is it like a percent owned by MSG? Is it's an MSG spinoff? Do I have that right or no?
I don't know if it's an MSG spinoff so much as it's a Dolan thing.
Got it. Is
Yeah.
this like when Dr. Dre went all in on Eminem, and he's like, "This is the last." Is this what that is? I think it is, right?
What do you mean?
What?
What are you talking about?
Wait,
like Dr. Dre was out of money, and all the money he had left, he went all in on Eminem, and that worked out really well.
You mean Beats?
So you're saying the Dolans out of money? I hope not.
No. In the 90s, this is what you're.
Like M&M's, like Hershey M&M's.
Man. Marshall Mathers. What are you talking about?
It was owned by MSG. I don't know if it still is.
See what I'm dealing with, Strazza?
Yeah,
this kid talking to me about Hershey's.
Hey, guys, what stocks are we buying today? Stocks are going to rip into year-end. Tech is going to lead. What are we buying? Pat, we're going to do a full hour on Spaces today.
I was going to say, how much time did you already spend talking about cybersecurity?
And the shittiest banks you could find.
Wait. In all seriousness, you want to know who owns Sphere?
Yeah.
VICI, VICI Properties. Yeah. They own Sphere.
That's also a publicly traded REIT.
What do you think? A little recess, and we can explain to Patrick who Eminem is.
I have a fun Eminem story. Yeah, we can do some recess. Screw it.
I didn't know Dr. Dre was broke and then became a billionaire again.
Not again for the first time.
The documentary about him and that man. What's the bald-headed man's name?
Yes, the Beats
Great.
guy.
I think it's HBO or Netflix, but it's an excellent documentary.
It is good.
All right.
What is that documentary with Dr. Dre and that bald man?
But you knew exactly what I was talking about.
It was like Eminem. You know, he's a rapper.
Patrick? I know. I was there in the early 2000s.
So the first CD I ever bought was the Marshall Mathers LP, and my mom did not. Obviously, that was like his first record. Right? No one knew who Eminem was, especially not my mom.
Knew.
Yeah, because all the kids were like talking about. So anyway, so I bought it, and I think my dad had knew what was up, and he was like, he was like, let me listen to this is at the dinner table. I was like, let me listen to this CD. I'm like 8 years old, and like the first track on that album was I think it was called "Kill You," and he's all about how he's going to kill. He wanted to kill his ex-wife or whatever. And my dad was like, goes to my mom. He's like, you should listen to what your son bought today. And she flipped, and we had to go back to the store the next day, and she screamed at the poor associate, and all he could say was, "Ma'am, there's a parental advisory sticker on this CD. Yeah. What more? What more do you want?"
Well, that was the start of a movement.
Mama Israel was not
thrilled with the situation. She was mad. She was mad.
I take it she was not a fan of NWA either.
No, not. She was mad. Yeah.
But Spencer and I kind of missed NWA. Like I had a similar experience, Spencer. Like
I did.
Eminem was really was the one that really got parents riled up. I think.
I grew up in Miami. NWA was actually a little more tame than some of the other stuff I was listening to.
Yeah.
The 69 Boys. Anybody remember the 69 Boys?
No.
Not for your grandmother to hear.
Did the music that's
Luke, Uncle Luke, hello? That was my childhood.
Have you heard this new rap music that's coming out of Miami more recently? I don't want to sound like that person, but if I had kids, I wouldn't let them near this stuff.
Oh my!
Oh, in my day,
listen to the girl rappers.
Strazza is the old guy yelling at the air.
No, there's some. I don't know. It's not for me. That's all I'll say. They're probably playing at JC's tailgate yesterday.
I grew up with 2 Live Crew. Like that's literally as bad as it gets. Like anything is right.
Yeah. Yeah. All right.
My first tape that I ever bought, my first single was Donkey Butt. That was the name of the song. Donkey Butt.
It's a cassette tape.
It was a single. It's a tape deck with one song.
God. Oh, jeez.
Yeah. Good job, chat. Good job.
All right. All right. Here's the schedule for the day. This doesn't include the fact that we have spaces at 11 a.m. on the Chart Report's Twitter, so stay tuned for that. As far as YouTube goes, Chart Request Live at 1 o'clock today. We got that as well. And that's our show. Thanks to Michael Lee. Thanks to Kimmy. Thanks to Pat. Thanks to all of you in the chat. If you want to drop us a like, we'd appreciate that. Follow us on all the social platforms. Hey, any questions, any comments, any concerns, any feedback, email us. questions@stockmarketmedia.com. And I think we're good.
Everyone ask yourself this very simple question here today. Do I own enough tech stocks?
And the answer for me is no, and I'm going buying.
Do that. Do that for yourself.
Yeah, it's going to be a no for me too, dog.
See you guys.
Later.
Run it.